Good morning. Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, Jeffrey Rothstein, President and CEO of EQ Inc. Jeff, the floor is yours.
Thank you, and thanks everybody for joining our call to learn a little bit more about EQ. EQ is a data analytics and intelligence company. We utilize data, machine learning, and artificial intelligence to provide our clients with the most complete data sets and relevant tools to allow them to understand their customers better and as a result, make the best strategic decisions. And who doesn't want to understand their customers and the competitive landscape better as they're building a business? Data-based decision-making is essential in today's environment, and we empower our clients with the most robust data and leading-edge tools and technologies that historically have never been available to help them build their business. The data and tools that we provide allow companies to gain a more complete picture and understanding of their customers. And with a better understanding of your customer in any business or any vertical of any size, you can better engage, communicate, incentivize, sell, and grow your business. The bottom line is that we provide data and tools that allow companies to grow their business in the most effective and efficient way possible. And better access to data, and even more importantly, the right tools to make that data relevant allow companies to perform better. And that's what we do at EQ. And let me just take a second to tell you how we got here. Basically, about 8 years ago, we were helping our customers and all of our clients engage better with their audience. We were doing media buying, social, search. We were doing this through different channels, and at that time realized that we wanted to get a better understanding of why consumers were acting in a certain way or why some companies were more successful than others. And we did an analysis, and it didn't take long to realize as we were looking at the best companies in the world and the ones that were disrupting all different types of verticals were using data and artificial intelligence better than anyone else. The Googles, the Facebook, the Amazons, they knew how to utilize data better. And as we were looking at what we could do to differentiate ourselves and how we could compete more effectively in the market, we at that point realized that data was going to be more important than ever before. As we had been building our proprietary technology, and our proprietary platforms consist of both a media buying platform as well as a data analytics and intelligence platform, and as we were building our proprietary media platform, we quickly realized as we were talking to clients that the landscape for that type of offering was getting very competitive, and quite frankly, media was getting very commoditized. And when we were talking to clients about utilizing our media buying, they looked at us and they'd say, that sounds great, but we're using Google, or we're using Trade Desk, we're using some of these other big companies out there. And we realized it was going to be an uphill battle. So we took a step back and we said, okay, here's a campaign that we ran that worked well, and here's a campaign that we ran that worked great. What was the difference? And the difference between good and great was data. The more data we could execute with, the more data we could compile, the more data we could use to better understand how to go and target and incentivize and message to the end consumer, the better we could perform. And at that point, probably 5 years ago now, we went back and said data is going to be the key to our success, and we started building a data platform. Fast forward a little bit, and today we're looking at really 3 different sides to our business. We're looking at understanding how a brand can utilize their data better. We're understanding how our data sets and how our proprietary data and relationships we've got for data partners can help enrich and empower that data even more. And the third is platforms and tool sets and predictive algorithms that can allow us to go and really push the envelope with what's possible today with respect to data and our ability to execute on that data. When people think of EQ today, they really think of the intersection of data and AI. Our goal is to provide the most robust and complete data sets and then give people the tools and the tool sets that allow them to go and get the most out of that data. And really, as a result of doing all that work, we've been fortunate enough to be trusted by and working with some of the largest brands in the industry across a few very important verticals. And I'm going to talk about that a little bit later. Our mission right now, when people think about why they're going to come to us, it's to allow our clients and to allow all businesses to better understand, predict, and influence consumer behavior. And as I said before, the ability to understand and predict and influence, really allow companies to outperform their competitors and push forward with respect to how they want to build their business. Let me just give you a few examples of how we got there, because it really came about from helping companies understand more than they could on their own. And this is a real-life case study that we worked on, which was a grocery store chain that I went into, and we were talking with them about different things we could do, and they stopped very early in the meeting. And they said, if you're here to sell us data, we don't need any more, thank you. And when we questioned them a little bit, and we said, well, help us understand what you mean by that. And they said, listen, we have a loyalty program. We've got a POS system. We understand all of the inventory at the various stores. We understand how much people spend, what kind of things they buy. We have a complete set of data that we're able to execute with. Thank you, but we don't really need any more data. We took a step back and said, you're right, to the client. We will never have as complete a picture of your consumers when they're in your store as you do, full stop. We don't pretend to, and we don't think we ever will. So that's your data, and that's your first-party data, and that is extremely valuable. And we're going to refer to that as a data abundance. You have an abundance of data, almost complete visibility when they're shopping in your store. But then they pay, they get in their car, and they leave. What happens at that point? What do you know about your customers once they leave your store? And the answer very quickly became, we know nothing. We go from this abundance of data where we know everything to what we always refer to as data blindness. We absolutely lose all visibility into what our customers do, who they are, hobbies, habits, interests. As soon as they leave the store, that goes to zero. And that's where we come in. And that's because of the data partners we've got, the data sets that we collect, and the way that we go about collecting all that data. We can go about that, and we can start explaining to people that, yes, you do have a customer that comes in regularly once a week and spends $250. And that's great. But when that customer leaves, they're going to Whole Foods and they're going to a different grocery store chain. So even though you think they're a great customer and you're getting a big piece of their business, you're actually only going to get you're getting a third of their wallet. What can you do to learn more about them? What can you do to incentivize them differently? What if you knew that they were health enthusiasts? They just had a new child. What if you knew that they were about to move houses and go to a different location, a different neighborhood, and you want to do something to save that client? What would you do? And that's where EQ comes in. When a client of ours has blindness when it comes to data, we're able to take what they do have and enrich it and empower it and put different data sets around all of those deficiencies they might have so they can better understand, they can better predict, and they can better influence those customers. And that's where we come into play. Our data sets right now are fairly robust. We started off with our data sets really focused on what we call geospatial layers. Geospatial to us meant what's happening in certain areas. Our hypothesis 5-6 years ago, which still stands today, is what people do and where they go in the real world really gives us a much more complete picture and a better understanding of their hobbies, their habits, their interests, all of the different things that they have to work with on a day-to-day basis, and where they might be able to, where they're spending their money, where they've got interest layers, and how that works. And we've been able to get that geospatial layer and really build throughout North America a fairly complete and robust data set of what happens in different geographies, whether that be at a zip code level, at a postal code level, at a dissemination area level. We're able to go and just populate those areas all the way down to households to understand more about what is happening. As we started building up that data, we looked and we said, who else would be interested in helping us, store and really build more of this data offering? And very quickly, we had companies that either we'd reach out to, and then more importantly, that started to reach out to us. And they'd say, we have data sets that we've been collecting now for 5 years, 10 years, 20 years, but we've never been able to connect what we can do to the digital landscape. And then they'd say, if you have something that you can do to help us get this online, we'd be very interested. And as long as there's a data point that has one kind of geocode, one kind of geo footprint associated with it, a postal code, a zip code, a home location, just something that we can then connect the dots with, we can help them monetize that data. And very quickly went from just our own data, being location, to consumer purchasing preferences, real estate, buying behaviors, insurance, automotive, credit scoring, all the stats all kinds of location data. We've got tens of thousands, now coming on hundreds of thousands of different types of points of interest, so we can understand what's happening at car dealerships, we can understand what's happening at movie theaters, we can understand what's happening at shopping malls, at grocery locations. We've got data sets now that allow people to optimize and understand more about their customers to execute better. An important piece of this slide, and I'll touch on it in a second, is also the middle layer where you can see PayMe. As we were partnering with and building up all these different locations, we felt, and we still do feel, that more proprietary data, the more proprietary data that we can get, the better. The better we can execute, the better we can influence, the better we can understand. And about 5 months ago, we purchased a company called PayMe, PayMe being a cashback application. And it's, again, there are other cashback applications in there, but the thing that excited us about PayMe were really 3 things. It was, number one, it is the most seamless, frictionless type of cashback app that's on the market. Number 2, it provides people, all of the members of PayMe, it provides them with with the opportunity to go and get money back and save money on just going about their everyday purchases. And thirdly, it provides us with an anonymized and PII-friendly data set, but it provides us with a data set of consumer purchasing that allows us to execute so many models and so much more information than we couldn't do in the past. And with that, we're really focused on how we build it and continue to go. So this is the landscape of our data sets, and PayMe right now really is a strong position for us in the data sets. It's proprietary, and it gives us way more information than most companies would ever be able to provide. Quick note on that, just as we're going down the path of PayMe. And I'd encourage everybody on the call, payme.com, and download the app, because it quite frankly is one of those apps that would allow people just to go about their daily business without having to do anything in order to get cash back. And it's easy as downloading your app, linking a debit card or a credit card, and then shopping. Members that sign up get cash back on every purchase that's done with a merchant that we're partners with. Merchants get an abundance of data that they could never have received previously. And from an EQ perspective, again, proprietary data set, new source of revenue generation for us, and great insights that we can provide to our customers. With all of that information, we're now able to go and, again, understand, predict, and influence. And I want to give you an example of one of the things we've done here. With data sets, we can start putting together and finding relationships and causalities that weren't around in the past. And one example was a client that called us up, and it was in the mortgage space. And the mortgage client said, we've got a problem. We have an abundance of applications, which would normally be a great problem to have. However, we can't get through them all fast enough. And right now we're doing it just based on FIFO, and the ones that come in, we basically do it on a first-come, first-served basis. But as we're doing this on a FIFO basis, we're really missing some great opportunities. And if there are some great applications, if we don't get to those applications fast enough, a competitor is going to take those and sign them up. Is there a way that we could go and help prioritize when things come in rather than just do the FIFO basis? And we said, maybe, because we have different data sets and we can try to help. So they said, okay, see what you can do. And they had sent us over 100,000 profiles of their mortgage applications. And when I say a profile, they sent us an address and they sent us a ranking. The address was going to be the home location, and the ranking was A, B, C, or D, A being great and profitable, B good, C not sure, D terrible, do not sort of engage with. They sent us that over. Our data science team, again, using our proprietary platform, which we've branded Locus, which again has all the data sets and a complete set of tools that people can start using algorithms against. Our data science team kind of said, okay, let's see what we can do and let's see if we can help. And very quickly, we used probably 2,000 to 3,000 different data sets and data points. We came up with some algorithms that said, I think we can now help you predict better when you get an application what that ranking is going to be A through D. And when we called them back, they said, great, can you prove it? And so from a prove it to us perspective, they then sent us over another 50,000 profiles. And this time they just sent us the address without the ranking. So we had the address, no ranking, and we had to put in the ranking. And we ran it through our system, basically sent it back the next day to the client. And the client said, this is actually great. And this was a 92% level of accuracy with respect to what we estimated or predicted those rankings be, A through D, versus what they know and they can experience on their end. And we're now working with them to set up an API, because what they like to do is every time a new application comes in, they'd like to go through our predictive modeling and say A, B, C, or D. And if it's an A or B, respond immediately. If it's a C, put it in the queue. If it's a D, don't waste your time. That's the kind of work we can do. That's the kind of work that we can do, which helps data predict more about what's going to happen, and it's changing the process within a business. It's changing the way they work to help monetize and grow better. Different examples, too, in different verticals for us. Again, automotive vertical, we're very good at understanding sort of auto risk. We're very good at understanding when people are going to be in-market auto buyers, at what level. We have data sets that allow us to do that, and we can understand that more. And again, Walmart, retail is a big space, and we do have a work that we do with Bell, who's a partner of ours in the telco space, but automotive big, retail big, financial services big, and I'll talk about some of the verticals we're working with in a second. Big thing for us right now that companies always ask is, okay, well, how do you make money? You know, it's great that we have data, it's great that we have tool sets, but how do we make money as we're working through all these things? And the big thing for us as we're looking at it is we do have licenses that we want to continue to sell on our proprietary platforms. For us, recurring revenue is key. Recurring revenue, which really started about 1.5 years ago, but recurring revenue, which we started pushing 1.5 years ago, is going to be a big focus for us going forward. And there's really 3 pillars right now to how we make money. The first pillar is Locus. So Locus is our data analytics and intelligence tool. And as I mentioned before, with Locus, it's got the data and the tool sets that allow companies to either build their own queries to understand more or utilize some of the data sets that we've been able to build for them to help execute better. Locus is a license revenue for us. So from a licensing perspective on Locus, we're able to go and license that out to our clients. Main verticals, again, financial services, insurance, automotive, and retail. We license to our clients, and the license revenue varies depending on how many seats and depending on what they want to do. But it can go anywhere from $7,500 a month up to $40,000 a month. And with that, it gives them access to the data and the tool sets. The interesting thing associated with that is that as we're going down that path, there's always going to be queries that they want to know. Let me understand more about my stores. Let me know more about my competitor stores. Let me know more about what's happening in the industry. And with that, there's a compute angle as well. So even though they have license to utilize the data, they have licenses to utilize our platform, if they want to start running their own queries associated with that, all of which can be done on a self-serve basis, there's some additional fees associated. So Locus is a license fee plus consumption model, which for us is a very compelling value proposition because it's the initial upfront piece that we have some reliance on, plus there's almost an unlimited amount of additional work and queries we can do once they start understanding the platform and understanding the sophistication of the tools, and that allows them to really utilize it and continue to grow. So not at all unexpected that sometimes if they're spending, even $7,500 at the low end of our licensing application, there could be 2, 3, 4, 5x of that in certain months with respect to consumption models. So a very exciting piece of our business, and watching that recurring revenue grow is key for us. And already we've seen recurring revenue grow from, call it 0 to well over sort of on a monthly basis, close to $150,000 to $200,000 a month. Exciting piece. Second piece is CPM for media. One of the things that we do, and I mentioned earlier that we used to buy media for our clients, one of the things that we do extremely well is utilize the data sets that we've got and marry the data sets that we've been able to accumulate and execute those for media. So even though there are bigger companies out there buying media, and even though people think that the Googles of the world and some of the bigger guys are hogging a big piece of that, and they are, we have created a very niche area where data sets, companies that are very focused on niche targeting, specific targeting, better understanding when they execute their media, we've got our media buying platform, our proprietary DSP that allows us to execute on that extremely well. And that, again, how we make money standpoint, that's your traditional CPM rates attached to both media and data, and that can be used for both online and in some cases even offline targeting. But the CPM allows us to work in that direction. And the third that we talked about is PayMe. PayMe, again, very interesting value proposition, brings us this, I don't know if people call it zero-party data, people call it first-party data, but a very proprietary data set whereby we make money on that by both the data that we're able to collect, anonymized, PII-friendly, but we can sell that data on on an aggregate basis, and we're able to take some commission. So as people are spending, and for example, if Burger King happens to be a client of ours, if people go and they spend money at Burger King, the customer at that point will be able to get money back from their purchase, assuming it's done with a linked credit card. Burger King will get information on how they're competing against some of the other competitors in the market. And from an EQ perspective, we'll be able to take a little bit of a commission off every payment that goes through that award. So in addition to all of the data that we're collecting by either partnering with or paying for or generate through our systems, PayMe is another way that we're going to be able to generate data and generate revenue. And it's going to be a paid-for data collection tool, and it's something that we are very excited about. And like I said before, unlike other tools where you will have to go and buy something through a website, where you'll have to get something and hopefully get points that can then be redeemed for something else, PayMe is simply the easiest way to do this. It's linked credit card with a purchase, money in your PayMe account, cash out anytime. Simple and easy. Last few things here are, as we're going through this, again, moat, people always look at what we're doing. We've been building things for the last decade. We've got intellectual property. We've got machine learning and AI algorithms we've been working with. We've got GIS mapping tools and visualization tools that we've been building. Really off-the-shelf software wasn't able to accomplish what we needed. And so a lot of the work we've done was to take things and leverage them and scale them in a way that they weren't meant to scale because we needed to get such significant data sets, and that's working out really well. Proprietary data, geospatial, again, I've got here 4 years. It's coming on 5 years of historical data, understanding, pre-pandemic, what was happening, during pandemic, what was happening, now post, or at least hopefully soon to be post-pandemic, what's been happening, accumulating this data, constantly looking at it, constantly evaluating it. Software, again, all proprietary things that we've built, and we do have some fairly strong relationships with our data providers. Quickly, again, from a financial perspective, the revenue growth has been there. We do have, because of the media business, a few blips as a result of COVID, but at the end of the day, you can see a fairly consistent upswing in terms of revenue across the board. And even more exciting for us than that is the data growth in revenue. Data continues to grow. Data is in demand. People want data. People are looking for data. And this is something that we continue to see a lot of demand for and a lot of excitement with. And lastly, when people think, okay, well, what does the future hold for EQ? We look at it right now, and we think that we are in an ideal spot for how this market is evolving and in a great spot for how the business is going to grow. At the beginning of the year, we talked about our priorities: insurance, automotive, out-of-home, retail. FinTech's actually one of those that we're looking at too. But each of these verticals, and I'd say that insurance right now, deep integration with insurance providers and into the insurance vertical. Automotive, dealing with some of the largest and best partners that we could in the automotive vertical. Out-of-home, a few great clients. Retail, especially now with the PayMe acquisition, is something that we're going to be able to have a ton of data on. So looking at each of these and the numbers that I've said for how these can grow, as we all know, each of these industries in and of themselves could be many multiples of what I'm showing down here. But in the next few years, this is what we're going to be delivering out of these verticals because we do have the relationships, the data, and the tools to make it grow. From an M&A standpoint, we're not afraid to do M&A. In fact, that we're very focused on growing both organically as well as from a very targeted and very efficient M&A process. Again, presented with dozens and dozens of companies every quarter. This year, we did complete PayMe. The other two areas that we're looking at are saying things that will help us get into the U.S., of which there's discussions happening, and then vertical targets, again, things that will get us even deeper into these verticals, and there's discussions there. So really starting to push out with respect to what our focus has been and where we're trying to accomplish some really targeted M&A and organic growth opportunities. Last one, innovation, and a lot of questions we get asked. It's cookies are going away. You've got poor tracking now and Apple and the changes they're making. These are not new to us. These are things that we saw coming years ago, and our systems have been really evolving and developing in a world without cookies, in a world without the tracking that Apple's going to try to slow down with. We're able to go, and again, it's a longer discussion, but the work that we've been doing right now is allowing us to go and understand that geospatial layer and understand how things fit in these geospatial perspectives and geo cohorts that we've developed, and the ability to understand household graphing techniques through synthetic mapping and targeting, all these things that our data science team and our development team have been working on to make sure that we are very well positioned to address all of those things. And then just quickly, again, from a stock preview, from a stock chart, this is how our stock has progressed over the last number of years. And as you can see, sort of with respect to what we've got outstanding, market cap, current pricing, et cetera. So from a timing perspective, I know there are a few questions that are coming up here, which I would like to address. So first question is, what is your vision for the company for the next 12 months? Where would you like to be? Great question. And like I just said, I think the biggest thing for us right now in the next 12 months is we are already working now on what I consider to be one of the, we're working with one of the largest data sets and one of the most robust tool sets when it comes to machine learning and AI. And the data that we've got, and I'd argue some of the richest data in the country, is something that clients are starting to appreciate even more. They're coming to us, they're looking. So in the next 12 months, I think our leadership position with respect to data and technology will be further enhanced. And I think if someone says, well, what's a big milestone for you over the next 12 months, I'd also say we've got to have bigger penetration to the U.S. markets. That's going to be for us, and that's a huge mandate, and those are some of the KPIs that we are working against. Next question, have your clients' ad spending been impacted by the global supply chain disruption issues being experienced? Great question, and the answer is yes. We have impacted that, and I think even though our numbers, as we saw on the previous slide, even though our numbers have continued to progress and we have shown some growth, the automotive industry, again, big vertical for us, automotive spend in that business unit has been down quite a bit. I think that our team right now is expecting that we'll probably have anywhere from $500,000 to $1 million of business sort of impacted and being placed on hold because of that. And even with that type of hold in that industry, we still have clients spending on data in that vertical, and we're still going to be able to show some incremental growth from a business perspective, even with those numbers impacting our overall growth targets, just because of the fact that we've been able to grow so many areas so effectively. Next question. We announced a $5 million plus deal with Canadian University. How were we able to grow that from an ARR perspective almost 8 times in the last couple of years? Our business model is really focused on targeted messaging and targeted delivery. The targeting is all contingent on the data. What we've been able to do with this university, and I think one of the things we're able to do in other industries as well, is to understand exactly what makes the best candidate for them. And best candidate means obviously somebody that can get accepted into their program, but even more importantly from a university perspective, it's people that will then stay for the full duration of the course. If it's a 4-year course and you have a lot of people that are leaving after year 2, that's lost revenue that you're never going to be able to make up. So we look at the attributes of people that just not applied, but people that applied, got in, and then stayed for the duration. And what made them different from the people that were leaving after year 1 or year 2. And that kind of data set allowed us to go and make sure we were targeting the right people for the various programs that this client was looking for. So that was great, and that's working out really well. And the other exciting announcement we had was a $500,000 deal with a major financial institution, again, to help them understand more about their customer base in one of their divisions and how we can help them execute better to push that through. Next question regarding PayMe. You've added a lot of functionality to the new release of PayMe. How much of that revenue do you think PayMe can generate in 2022? We have invested a lot in PayMe. PayMe right now, and people will see from our financials, we will invest this year probably $1 million in PayMe, building the platform, getting the platform back into a position where we think it can compete with others out there, and quite frankly, where it's something that we're proud of in terms of generating new members. Our membership has already increased probably close to 100% since we bought the company. We are generating more CardLink members. We are signing up new merchants all the time to add more content onto that site. From a revenue perspective right now, PayMe right now next year should be able to do for us between $3 to $5 million. I think that's probably more on the commission side. There is upside from that again once we get the data opportunities flushed out, and adding that data and being able to monetize that data, again, very exciting for us and something that we think we can do a lot of work with. And then again, I know I'm running out of time here, but I will take one last question, and then I'm always happy, by the way, to connect with people if there are other questions that people have that I was not able to get to on this. And the biggest catalyst to short-term growth and long-term growth, the biggest catalyst for us right now is all in execution. We've got right now a lot of inbound coming in, whether it's companies in the financial services sector, the insurance sector, automotive sector, retail. We have some of the best data sets and some very solid tools that we built that are proprietary, that are in market. That now is getting more people signed up and just being able to respond and continue to push through. This year was a big year for us in terms of proof of concept. Next year is going to be a big growth year for us in terms of full-on execution, and we've already seen our ability to generate the value for our customers. They've seen it, we've seen it, and now it's really just putting our foot on the gas and making sure that it continues forward. And long term, like I said, the growth that we've seen right now has really been in the Canadian market in a variety of verticals. I think our focus on these 3 or 4 main verticals and then being able to expand to the U.S. will be a huge opportunity for us as we continue to go and execute and build. And I know it's after my time slot, and again, I'm sorry I missed a few of the questions here, but always happy to take a call or address this with anybody after the conference if needed. So again, thank you very much for your time, and I appreciate you spending a little time to learn about the company.
That does conclude today's presentation. Thank you for tuning in.